Welcome to Tax Chit Chat, the place where we talk all things tax all the time. What happens when you send the IRS a payment? How do they know what to apply it to? Does it go to the tax? What if you owe penalties and interest? Better yet, what if you have tax debt from multiple years? Well, in this video, we'll go over how the IRS typically applies payments, as well as how you can tell the IRS what you want a payment to go towards. And towards the end, I'll even go over some situations where you absolutely want to indicate what a payment is for. So make sure you stick around for that. So what's the normal IRS payment order? When you make a payment to the IRS, it will automatically be applied to your account in a manner that is in the best interest of the IRS. But what is best for the IRS in handling your payment can be different from what is best for you. So generally speaking, the IRS applies payments to outstanding taxes owed first, then any penalties, and lastly to any interest. This is because the first responsibility of the IRS is to collect the tax owed. After the tax is collected, they'll then work on collecting the penalties and interest. Understanding designated payments. Now, in some situations, it's in your best interest to make a designated IRS payment. A designated payment is one in which you tell the IRS how you like them to handle and apply it. And this is generally done via the memo line of the check you send them. Because of this, depending on the payment, making a designated payment when paying online via irs.gov can sometimes be a little challenging. So if you want to make a designated payment, it's usually best to mail the IRS a check. And if you want to know the correct way to write a check, then make sure you check out this video from our Minding My Money Mondays video series. Now, when exactly would you want to make a designated payment? Well, here are some scenarios. Number one, payment of a balance due, meaning when you want the IRS to know that you are paying the tax you owed on a specific tax return, be it income taxes or payroll taxes. Number two, estimated tax payments, when you're paying taxes for the current year that will be filed next year. Number three, when you need to pay a specific piece of tax, penalty, or interest, like when you disagree with part of an IRS notice or balance, or when you're trying to pay trust fund taxes. And lastly, when you're trying to let the tax debt expire. For example, let's say you owe taxes for 2011 through 2020. Collection of the 2011 taxes should be set to expire sometime in 2022 if the tax return was filed on time and there were no tolling events. This is due to the 10-year IRS statute of limitations on collection. So if you're about to make a payment that will pay some, but not all of your taxes, you could be best served by designating the payment to be applied to the most recent debt, say 2020, first. This allows the older taxes a greater chance to expire due to the CSED being reached. Without the designation, the IRS will apply the payments to the oldest tax year first, meaning 2011, which is set to expire in 2022. How to designate a payment. So let's take a look at three scenarios where you're designating a payment. In the first scenario, let's say that you had a balance for your 2020 taxes, but you also owed for 2019. When you write your check, you would make it out to the U.S. Treasury and indicate that you're paying $1,040. Down in the memo line, you would include your Social Security number and that you're paying for your 2020 Form 1040 balance owed. This keeps the IRS from accidentally applying it to your 2019 balance. And if you were doing this online via IRS Direct Pay, well, then you would indicate that the reason for the payment is a balance due, that it was for Form 1040, and then in the last drop down, you would select the year that you are paying against. In our next scenario, let's say that you're making a Q4 2021 estimated tax payment of $500. Your check will look similar to the first, but down in the memo line, you would include your Social Security number and that you're paying for your 2021 Q4 Form 1040 ES. And if this was being done via IRS Direct Pay, once you select the reason for the payment is estimated tax, the remaining fields will automatically default as estimated tax payments can only be made against the current year. Now for our last scenario. Let's say that we made a mistake on our 2019 tax return and the IRS is saying that we owe $24,833. We agree with the tax and the interest, but we don't agree with the $3,989 penalty that they want to charge us. Well, when we send our response letter with our check for $20,844, we are going to tell the IRS how we want it applied. Remember, by default, they'll try and apply it to the tax, then penalty, and lastly, the interest. So in the memo line, we will put our Social Security number, the year that we are paying for, and that we want $19,947 to go to the tax owed and the remaining $897 to go to the interest. So what about the penalty? Well, it will show as unpaid for 2019 and the IRS will have to review our letter and let us know if they'll approve or deny our request for them to forgive or abate the penalty. And if you need help with unfiled taxes, unpaid balances, or just dealing with your IRS notice, then make sure you check out this video or head on over to filedoldtaxreturns.com to learn more about our services and ways we can help. So friends, until we meet again, always remember to keep earning, keep learning, and just like that, this chat is adjourned.